Good day, everyone. This is Patrick from EasyFX Code Trading System, and it is Saturday, the 5th of November, 2022. And it's the weekly technical analysis for spot gold and dollar yen for the second week of November. Let's begin with spot gold. You'll see a sharp rebound here on Friday, non-farm payroll Friday. After hitting a key support zone, there was a previous double bottom before, so now it's a triple bottom area. So this is definitely a strong support zone. And previously, from the previous week, it was previous couple of weeks, it was sitting inside this rectangle, consolidating inside the rectangle, and started the week slightly weaker, dip below the rectangle, but managed to recover back up until it almost tested the upper triangle zone and was rejected. That was the attempt on after the Federal Reserve announced the rate hike of 75 basis points. The majors tried to push against that, push against the flow, and was rejected and fell back lower. Continued that until Thursday, where it managed to recover. Very strong and powerful rebound there, and managed to recover back above even above the rectangle towards the dynamic resistance of the daily 55 EMA. So now this is it's a major bullish signal here. So even though the jobs added was higher than expected, which could add to the inflationary pressures, and which means it will influence the Fed to increase rate at a higher rate as well. Continued in December, supposed to be 50 basis points, but if the inflation numbers do not dip lower or taper down, then that could still influence the Fed to increase rate by another 75 basis points. So this week's CPI figure is going to be a critical indicator that could influence whether gold is going to continue higher or brought back down. So the next key resistance is at 1700 round figure, and it's already well above the 1650. So let's move this resistance, and it's going to be a critical one here. Support is confirmed, and now probably this box, can get rid of this box now. We could add a interim support level here, just below the 1650 and the 138 FIB extension. And this resistance up here at this swing low, previous swing low at 100 FIB, together with this daily 55, is now forming an interim resistance zone. We could mark that as well. All right. So fairly important week for spot gold next week. And let's take a look at how bullish that is on a weekly time frame, and you can see a very strong bullish rebound. So it's definitely going to try to resume its bullish momentum, and let's see if it's going to make it to this previous trend line where it fell from twice. Now it's going to try to climb back up towards the 1700 and probably 1705 area. Try to test this rising trend line. So there is also US midterms elections on Tuesday, so there could be some impact on the stock market as well as the forex market, currency market, to see whether US dollar is in favor of the results. Okay, so for now, we'll leave this FIB levels as it is. It hit the 162 for support, and it's still operating between the 162 and the 100 FIB. All right, so we'll compare this with the US dollar index, see whether on Friday, whether it did fall lower as an inverse correlation. Let's switch over. And here's the US dollar index, the DXY. And as an inverse correlation with the euro and the other major pairs, that's the strong retracement lower here on Friday, right after the non-farm payroll report, and fell from the resistance zone just below the 138 FIB extension and fell right into this swing high here, right into this previous swing high. And with the daily 55 dynamic support there as well. So it's still within this bearish channel that we just identified last week. So it's probably just going to, if it does extend lower, then it could try to test this significant support here at the 786, just above the 109 round figure. So the next interim support at 110, major support at the 786, just above the 109, this zone. Now this will I think we can remove this one for now. This is still significant resistance up at the upper channel trend line and the 138 FIB extension. So we'll see if there's a bearish continuation next week, and if it does, try to test this 786 where the previous swing low was, or whether it's able to recover and bounce off this swing high here, or even at the 110 to try to recover back above the 111. If it does not test the lower channel trend line, and if it does make a higher low, then that could be a sign that the US dollar is going to recover further. And this week, the CPI data will be a major trigger on Thursday. If it is still fairly high, then that will likely influence the Fed to keep at a 75 basis points rate hike in December. So that's going to be keep pushing the interest rate higher. So that's going to be a critical data point for them. All right, so for now, I think we'll leave the fib levels as it is. And let's move back to the other major pairs. Let's move on to the dollar against Japanese yen, where for the week it's still stuck and consolidating between the 149 and the 146 levels, round figure. 145 is still strong support zone now, with the dynamic support from the 55 coming up as well. And of course, the major resistance at the 150 round figure. It coincides with the 138 fib extension here. So on Friday, it did dip lower as well, along with the US dollar index and other dollar pairs. But it's still well within the consolidation area. So for the dollar yen, it's going to be difficult to try to break out higher again, because there's the exposure to the Bank of Japan's intervention, where they will try to keep the Japanese yen from weakening further and try to push the US dollar back down. So for now, my traders and we're all looking for opportunity to short dollar yen and its cross pairs. So it's difficult to try to take long positions. Now there is an possible triangle here, lower trend line forming, and not sure whether there's an upper trend line that I could draw, but we'll leave it as it is for now. I was looking at this possible area with this triangle. But it could be too narrow. So we'll see if that's going to consolidate next week and where it's going to break out from. And on the weekly time frame, it's closed as a spinning top within the previous week's doji, so it's a harami here. So it's either another week of consolidation before a breakout. There will be a breakout soon. And we'll see if the CPI is going to impact this movement as well for the Japanese yen. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.